Nigeria's equity market has gained over 1% this week, but which stocks are driving activities on the local bourse? Joining me to discuss this and more is Moses Hamed, research analyst at Investment One Financial Services. Moses, thank you so much for your time. So the market is up this week, thankfully, I would say, but it's still down about 2.6% for this year. Now, we've seen yesterday, for example, that Zenith Bank, ETI, and Unilever lifted the bourse. The big question is, how sustainable are these moves to the upside? Your thoughts?
I think overall the sentiment is still weak. Apart from the gains we saw in some bellwether names like MTN, Danksem. I think last week MTN, Danksem were part of the major stocks that drove the market. But this week it has been more of Danksem. Danksem has been the major driver of improvement in the market so far this week. So it's not like overall improvement in the sentiment in the market. It's quite weak so far.
So what are your expectations for the next month or so as we close the second quarter and into the third quarter? How do you expect the market to trend?
Well, historically, Q3 is not always a good quarter for the equities market. You see some portfolio managers going on the annual leave or something like that, and that actually slows interest in the market, slows trading and all those things. And if you add to that, the macroeconomic condition of the country is not good enough to say we see something exceptional this year. So it's most likely we'll see a weak quarter as well, a weak performance rather in next quarter. And that's what we see. If you look at macro, GDP numbers may be reading positive, but going forward, what do we see? I think it's still going to be a weak performance for the quarter.
So in that context, how do we invest? Are there any names you like right now, or do we simply keep the money in cash?
Well, in an environment where inflation is around 18%, keeping money in cash will not even be the best solution. I think it's still better to invest as much as you are going to get a return that will be lower than your inflation, but it's still better in a way to reduce your negative rate return on your asset. So it's better to still invest, but I think some names like MCN, Danksem are still good names that you can still invest, and some of these banks will still find a way to declare decent results at the end of the year. So it's still always good to look at some of these quality names like the Zenith, GTB will still find a way to give good results at the end of the year.
I think there's still an expectation that inflation will still be firmly in double digits for the rest of the year. And indeed, given the outlook for the government's fiscal situation, and I'm referring now to its budget, it's likely there's going to be a supplementary budget, which could mean that fixed income yields could rise even further. Now, in that context, do you think that the stock market is bound to fall even further in the third quarter?
Well, the major thing is that even if yields should rise in the fixed income space, to what level? Will it really cover for that inflation? I doubt it. And if you look at the equities market, there are still some names that you can still look out for that can give you better return, even above your inflation. I think this week, Okom particularly has been over 20%. That's what you see in equities market. So just for you to position in decent names that can give you this return above inflation. But again, overall, the market will still be weak. But if you can position some quality names, I think they can still give you better than what you get in fixed income. I'm not sure government or CBN will want rate to get to double digits. Strong double digits rather, maybe at 20%. I don't think yields will get to that level. We're already at 13% for 1 year, for 10-year benchmark bond. So to what level can it rise again? It can still rise, but the level of increase is actually lower. The level at which we expect to increase it should be lower going forward.